And today we're going to answer the major question is, why is renter's insurance required? As well as I'm actually going to give you some workarounds to find some of the least expensive or the cheapest ways to get out of that while having renter's insurance. So to contradict my answer to the question is, it's actually not required. It's not specifically in any specific state that I'm aware of, and you guys can comment below if I'm missing any, that requires renter's insurance, period. It's something that the landlord does to protect their investment. It's very similar to if you were to buy a house and you got a loan on the house, that loan company would require you to purchase home insurance. Renter's insurance is similar to that, where it's not because you own a home or you have a loan, but there's a risk there. Just like if you lost the house and the house burnt down, they're not going to expect you to have the money to pay for it, so they want the insurance to pay the debt on that. Well, if you had something happen that was a claim that was your fault, the landlord wants you to have insurance that pays a liability amount towards that building or towards that situation that came up. So let's dive in a little bit further. To answer this question, let's look at why a landlord wants you to have a policy. If you're like most people, they actually have a specific amount. Typically, you don't see a landlord that'll let you do $100,000 liability. They'll let you do $300,000 or $500,000. That's the two most common renters policies that you can get. Actually, what I do is when I talk to people, because a lot of insurances are cheaper when you combine auto and renters, so the way I explain it to customers is it's kind of buying a liability policy. Because most people, if you're renting, if you're just starting off renting, you're going to borrow a couch from somebody, you've got your clothes, you might have some gear, some activities that you're invested in, but you really don't own a whole lot. If you add it all up, if you took the rooms that you had and went around each room, you're typically going to find that you're going to have $3,000 to $5,000 per room that you have in the home. So if you figure a 2-bedroom house, you gotta add the bathroom, you gotta add the kitchen, you gotta add the living room, so you're gonna have roughly about $25,000 worth of renter's insurance that you should go towards. If you don't have that much, it's not required that you have a specific amount. I believe the minimum that I've ever seen anyone do is $10,000. I don't know if there's a cap that goes below it. I've never really tried to go that low, because after a while, it doesn't make any difference to have that low of an amount. But the landlord doesn't care how much you carry in personal property, because that's just your stuff. That's your TV, your couch, your wallet. If you were to shake the building, anything that fell out that you owned, that's your personal property. They're more concerned about the liability portion, which is that $100,000, the $300,000, or the $500,000 limit. You can go higher than that, but it doesn't typically go above that. You fell asleep and you had the candle lit. Assuming that you have pets, or just assuming that the candle was on the edge of a desk and somehow fell, it lit the building on fire. The landlord has insurance for the building, but that company is going to go after you, the tenant, who started the fire. It's actually happened before where someone was actually in the hospital and they got served a lawsuit paperwork from an insurance company because of a fire that they started. They were liable for that claim, and if they didn't have the right coverage, then they weren't going to be covered at all. Well, that's not the major piece that the landlords are looking towards. They're more concerned about the liability risk. You come over, you visit, you've got a couple friends that come with you, and those friends have something go crazy. It's really your responsibility to take care of the rental dwelling that you're in. It's your responsibility to make sure everything's safe. If you have shoes laying all over the floor, a friend comes over, trips, falls, and hits their head, that could turn into a concussion, a night in the hospital, could be a $300,000 claim. Well, they normally would sue the landlord, but because the landlord has forced you to carry insurance, the liability portion, they're going to go after your insurance. Because the landlord's still going to deny that claim, but they have to fight it. And the fighting it is what costs them money. What they're internally doing is they're forcing you to fight the claim, not them. So depending when you watch this video, the Tiger King was a thing. And this is my best example I can give you, is the lawsuit that happened between the two, Carole Baskin and the guy that was the Tiger King. If you looked in, I believe it's episode like 6 or 7, they talk about the lawsuit where Carole Baskin won, but it cost her over $1 million to fight that claim. Her perpetuity was $1 million. So she actually lost money to win that lawsuit. That's why you hear in most lawsuits, lawyers are the ones that win. Not to say anything bad against lawyers, because you need them in certain points. But if you're going to have a problem where it was your fault and something happened due to your negligence, the landlord wants to have your insurance pick up that fight instead of their insurance picking up that fight. Now, if there is another situation where, assuming the roof caved in and the landlord was aware of it and you told them and something happened that was negligent on their part, that's where their insurance is going to kick in. So they already know that part of it, but they're more scared about the part that yours is going to carry. So to recap the end of this video, that's essentially the reason that it's required is to protect the building and the assets and their liability portion of that. If something goes negligent, they've got money to go after, because if you do have a claim and it is your fault and you don't have renter's insurance, you've only got so much money that they can get from you. And if they can't claim it correctly, assuming that the landlord had some sort of hook where they didn't have enough coverage, now it's their point where they're gonna go after your insurance, because you may only have a few $1,000s worth of stuff they can go after, but your insurance policy is gonna have multiple hundreds of thousands of dollars that they can take from it. And it's fair, it's essentially paying them back for any damages that were done or anything that had happened due to some sort of negligence or just a mistake. So companies that you should look into for renter's insurance. The very first place I would check is the person that you have your auto with. What I tell people more often than not, there's usually about a 15 to 25% discount on your auto insurance if you add a renter's policy. So you actually might even get the renter's policy technically for free, or it might even pay you money to have that renter's policy. It's really easy to find out if you're going to be negative or not, is because if you're paying $200 or $300 or more for car insurance, then you're probably going to save somewhere around $30 to $40 for your auto, in which case you're going to only pay about $20 to $30 for the renters. It's really basic stuff. Now, I actually used to sell insurance in about 45 states, and renters was almost the same across the board. Unless you're in a major high population area, you can just plan on the cost of renter's insurance being right around that $12 on the low end and $25 on the high end. Most commonly, I just tell customers about $18 a month, because that's what I found to be the most common. It ranged between $15 and $18 per month almost every single time. The only time it would go over that is, like I said, high population area or heavy claims area where there's a lot of theft or fraud or things like that. It's just a worse neighborhood, so to speak. Or that you have a lot more stuff. You have guns to protect, paintings to protect, more jewelry. You want $80,000 instead of the $30,000 common renter's policy. Now, there's actually two companies that I would lean towards myself for renter's insurance, and from my experience and all the reviews that I've done on this channel, there's two companies. So the first one is Progressive. Progressive, you know, the lowest that you can do, at least in my state, is $125 per year. So you're just over $10 to $11 per month. They usually have really good coverage. They offer different deductibles. You can kind of pick and choose what you want. And I'm actually going to make a further video that goes more in depth on like the pieces of a renter's policy. So if that's something that you're interested in, definitely subscribe below and then turn the bell icon on so when that video comes live, you'll have it available. The other and the second company that I would lean towards is Lemonade Insurance. It's pretty much a direct competitor with everybody who wants renter's insurance. I'll link a video up here where I actually did a review over Lemonade Insurance, where I actually did a live quote for renter's policy, and they won. They actually beat out most of the companies that I went through, and they were right around that $8 to $12 mark for just a basic renter's policy. The main difference between the two is the Progressive, you can go to a live agent, talk to them, get it explained with them, figure out what the right path for you is if you care that far into that policy. Because if you're going to pay for it, you might as well make sure you get some good coverages with it. Where the Lemonade policy is more of a bot system. It's no live people. You're talking to a robot, or you're texting through a system or going through their app, and they just give you a price. If you like it, you buy it. If you file a claim, it goes through their system, where there's not really a whole lot of human interaction in general until you actually have like a claim where they have to talk to you. In most cases, you still start the claim on the bot and go through the whole process. So I'm curious what you guys have found. Let me know what companies have been competitive in your area.
One of the agents here at Effective Coverage recently sold a Denver renter's insurance policy, and the insured wanted to know what happens when I file a renter's insurance claim. How hard is it to submit a renter's insurance claim? Generally, it's pretty straightforward process to file a claim on your renter's insurance policy. Someone in the claim center takes basic information about your claim. A claims adjuster reviews and researches the claim and contacts you for additional information if necessary. Once that adjuster is satisfied as to the cause, type, and the amount of the loss, checks are cut. Some things can delay the process, to be certain. Liability claims tend to require much more detailed review than property claims. This is primarily because property claims are a one-off payment, where liability could potentially result in additional payouts once the liability has been accepted by the carrier. By far, the vast majority of renters insurance claims are clear-cut property claims. Sometimes, something odd about the claim will stick out to the adjuster and require further review. There may be a question about the amount of the loss, in which case you can submit receipts or other evidence of the value. Credit or debit card statements showing the purchased item could be useful here. Disagreements about the value are generally resolved very quickly. Disagreements about whether the item existed in the first place, however, are not resolved quickly. The adjuster or investigator will review the reports you submit, possibly interview other people who may have useful information on the loss, and may even require you to submit to an investigation under oath, where you swear to a written statement of the facts of the loss. This helps the adjuster determine the merits and value of the claim. This process, in the rare cases where it's used, also helps prevent fraudulent claims that just cost everyone more money. So larger claims and liability claims obviously have more attention paid to them. Even small claims that can be thoroughly investigated if something seems amiss. Again, this protects all policyholders and keeps the claims process smooth for obviously legitimate claims, and the price of all policies down.
Rental property insurance, exactly what you should be looking for as an investor, and it's just really important to understand exactly how your property is insured, because most people don't realize that they're either underinsured or overinsured until the time of a claim, and at that point it's entirely too late to make any sort of changes to your policy. I'm an investor myself. I've got over 60 doors, and the entire reason that I wrote this book and really got into the property and casualty insurance world to begin with is because when I became an investor, I quickly realized that not many insurance people knew how to insure correctly a rental property. The investor world and the insurance world used completely different words to describe the same thing. So after I bought my first rental property and I began looking for insurance, I couldn't find someone that used the same terminology that all of my investor friends did. So as I started getting to know more real estate investors, I quickly realized that we all had the same problem, just because the two worlds were using completely different verbiage. So I made a deep dive and a commitment to learn everything that I could about insuring rental properties. Consequently, now I own an insurance agency. This is in no way a solicitation for you to use me as service. I'm not your insurance agent. Before you act on anything in any of these videos, you need to be sure to consult your insurance agent to make sure that you are getting the coverage best for you. But nonetheless, I now own an insurance agency, and we exclusively provide insurance to other real estate investors. In this first video, let's discuss the difference between a homeowner's policy and a dwelling fire policy. So, the main difference is that a homeowner's policy is for your personal home and property that you own or occupy. A dwelling fire policy is for any residential rental property that is not owner occupied. Other than that, the policy forms are exactly the same. And what I mean by policy forms are when you get your declaration pages, those shows you how much coverage you have on your home or your rental property, and then after the declaration pages you have the actual policy forms, which discuss what's covered, what isn't, any sort of exclusions that might be on the policy. And because each insurance company provides their own policy forms, then you're going to want to read through your own policy and double check anything that I say, again, because every insurance company is different and every situation is different. There's no cookie cutter template that you could put over all investors or all insurance policies. So now that we've covered the main difference of the homeowners and dwelling fire policy, let's now talk about the similarities. So now that we've discussed the main difference between the homeowner's policy and the dwelling fire policy, let's talk about the similarities, which are the policy forms, the actual loss settlements, which is actual cash value or replacement cost, and then the actual coverage letters or the available coverages on the insurance policy. So let's start with the policy forms. Now the first form that you have is called Basic, or HO1. HO1 is what people in the insurance industry would call this policy. Now, surprisingly, this basic form of coverage provides the most basic form of coverage. Things like wind, fire, and things that you would just automatically, instinctually understand that insurance covers. I'm going to show you a form here once we go through all of them. The second form is Broad, or HO2. Broad is a little bit more complex than your basic form. It includes, the only thing that I know for sure that Broad covers and not basic is the weight of ice or the weight of snow, which, hey, where I'm from in North Carolina, not a big deal at all. Here in the Midwest, in Ohio, that could really come in handy. And the third form is called Special Form. Now, there's one more, it's called an HO5, but that in rental properties is not anything that we ever need to discuss. Now, Special Form, this covers everything. This is what's called an open peril policy. Now, what open peril means? Open peril means that anything that could possibly happen to your property is covered unless the policy form specifically excludes it. If something crazy happens to your property, under Special Form, it's going to be covered, unless you read through the policy and it's excluded. Now, both Broad and Basic Form, that's what's called Named Peril Policy. Now, the word peril just means cause of loss. Something that happened, like fire is a peril, wind is a peril, water damage is a peril, anything that could cause damage to the property. It's a strange word, but nonetheless, that's what it means, and that's how it's used. So in Basic and Broad, a named peril, what that means is the policy does not provide any coverage unless it is listed inside the policy form. So under a named peril, if and only if the cause of loss or the peril is listed inside the policy, will this insurance policy provide any amount of coverage. Alright, now that we've covered those and we discussed the ideology of it, let's actually look at the policy coverage form to see what all is covered. Alright, so here you can see the cause of loss forms comparison chart. This was generously provided by the Certified Insurance Counselors, or the CIC, so let's thank them for that. So here you can see the difference between the Broad form and the Basic. So your fire, lightning, explosion, windstorm, hail, smoke, aircraft, riot, vandalism, sprinkler leakage, sinkhole, volcanic action, and then your fungus, wet rot, dry rot, and bacteria. The fungus, wet rot, dry rot, and bacteria, that is like mold. That's a really fancy, convoluted way of saying mold. So these are all of the causes of loss that are covered on Basic. And remember, Basic is a named peril policy, which means it has to be listed here. So if a fire occurs on your property, then it's covered because it's named here. Same with Broad, it's also named. So as you can see here on Broad, between Broad and Basic, the coverages that Broad provides that Basic does not are falling objects, weight of snow, ice, or sleet, water damage, and then additional coverage for collapse. Now what all that means is purely situational. So again, like I said, all of this information is good to have, but this video alone is educational. In order to truly have a grasp of what is and isn't covered, you need to both speak with your agent and also consult the actual policy form that you've purchased. And again, even though this was very generously provided by the CIC, then this doesn't necessarily mean that your policy is written this way, or that your Basic policy does provide coverage for vandalism. We see the 1 star. It may be an individually excluded endorsement. So you're most certainly going to not want to take this comparison sheets form for, you're just going to want to take it at face value. You're not going to want to make any decisions or anything based on this form alone. Because as helpful as this form is, I also think that it falls a little bit short, because on Special Form, now that's an open peril policy, right? So everything is covered, but it's just not that detailed, because Here, the only things that it looks like it adds are theft and direct physical loss. Now, direct physical loss is kind of like a catch-all, right? Because no damage would be done to the property without some sort of direct physical loss. But